Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore. Thank you for tuning into the video today. We've had some recent news in Queensland. They have backflipped on the proposed land tax changes. So what I'd like to walk you through in this video is what was proposed, what it could have meant for property investors and the market in general, and what rules are going to apply going forward. Now, it's important to highlight here that they have effectively reserved the right to change these rules in future. It has been shelved, it hasn't been completely quashed. So if you do own property in Queensland or you're thinking of investing in Queensland, make sure you're paying attention to potential land tax reforms in the future. But let's dive right into what land tax is, how it's applied, and what they propose to change. Let's get started. Now, the current rules when it comes to land tax in Australia are relatively simple. They are state and territory based, which means that each state and territory has its own land tax-free threshold. Now, when we're talking about land tax, we're talking about the land value of your investment property. So if you have for example, an investment property that's worth $1 million and the house that is on the land is worth 400, then the land value is 600,000. And that's what gets assessed when it comes to determining how much land tax you actually need to pay each financial year. Now, in Queensland, the land tax-free threshold is $600,000 for an individual. Now, what that means is that if I own an investment property in Queensland and the land value is $500,000, I'm not obliged to pay any land tax because I'm below that tax-free threshold. Now, under the current rules, if I also own a property in Perth, Sydney and Melbourne, they don't get included in determining how much tax I need to apply in Queensland. Now, this is what they propose to change, and this is what they have backflipped on. So let's have a look at what they proposed, what it would have meant, and what it could have done to the market. So the proposed change meant that if you own property in multiple states and territories, including Queensland, then those values would have to be included in the assessment when it came to determining how much land tax you had to pay in Queensland. So if we consider a simple example, let's just say that I have one property in Brisbane and the land value is $600,000. So I'm right on that land tax-free threshold, no tax payable under the current rules. But I also own a property in Sydney, and the land value of that property is $1 million. So when I report my tax under the proposed changes in Queensland, I would have to report that I have a land value of $1.6 million. Now, the land tax obligation or the land tax bill is still only a portion based on how much of my property is in Queensland. But by including the value at 1.6 million, it means that it pushes me into a much higher tax bracket. Now, I realize this is relatively complicated, so we're going to post a link in the notes here to give you a bit of a case study in writing so you can have a look at what it would have meant for you. Now, where did it all go wrong? Well, unfortunately, the Queensland state government wanted the other states and territories to actually report on your land value in their own states. So if you owned a property in Sydney, for example, they wanted the New South Wales government to report to the Queensland government on what that land value would have been. Now, effectively asking another government to put on more staff to report to Queensland to drive revenue for Queensland. You might have guessed that this was a bit of a flop from the very start. It could have also meant that there was double tax. So for example, if you reported the wrong value of your property in Queensland that you own in Sydney or Melbourne or Perth, how do you determine exactly what that value is and who checks it? Again, it was a bit of a disaster from the very start, but thankfully these proposed changes are not going ahead. Now, I just want to have a very quick look of what it could have meant for both investors and for tenants if these proposed changes had actually been passed. Now, if the land tax bill had have increased, so let's just say we go back to our case study, we've got the $1 million property in Sydney, we've got the $600,000 property in Brisbane, under that scenario, our tax bill would have gone from $0 to about $5,400. Now, okay, it's only $500 a month, not the end of the world, if you can afford it. However, it's still $5,500 a year. So why, as the landlord, should I be expected to simply wear and absorb that cost? Well, the simple fact is, I wouldn't. I would simply pass that cost on to my tenant. So we've got a market with ridiculously low levels of property supply, an incredibly tight rental market in Brisbane at the moment with a vacancy rate of less than 1%. The last value suggesting we're about 0.7%, and the average property remaining vacant for about 2 weeks before it's leased. How on earth do you pack up your life, move into a new property, pack up your boxes, sell your place, get out of your current lease, and move into the new one, all within 2 weeks? So what this would have meant is that it made it much harder for renters to get into the market. The cost of renting would have gone up, and it naturally would have made Queensland a less attractive destination for property investors. Now, I certainly don't believe it would have led to any sort of collapse of the property market in Queensland, but it certainly would have made prospective investors look at the other states and territories. So as I said, thankfully this hasn't been passed, but a very important one to be aware of, particularly when you're looking at your own cash flows, your own tax obligations and planning, and looking at future property investment. Stay tuned for further changes on this one. If there are any proposed reforms or changes to what was proposed, we'll certainly be releasing more updates. But thank you very much for tuning in. If you have any questions at all, drop me a note in the comments or reach out to me directly. Thank you again for tuning in. Please remember to like and subscribe to the video, and I'll see you next time.